Well, hi there, everyone, and welcome to the VIP Trade Room with Roger Scott and Matt Horton. Today is Monday, November 24th, and my name is Raleigh White, and I'm coming to you from a cloudy, overcast, and rainy day here in Austin, Texas, and I'm going to be your moderator today. Now, in today's session, Roger is going to be covering a range of important topics, and he's going to be focusing on those key tools that he used to generate trade ideas. Specifically, he's going to be doing a deep dive into the market internals and how to use them. Specifically, he'll be talking about the VOLD, the ADD, the tick, and the VIX. In addition to that, he's going to give us an introduction to the Master Blaster Oscillator and how to combine three indicators for synergy. He's also going to talk about using levels to help enter and exit trades. And as a bonus, he's going to give us an afternoon update as to which stocks are on his watch list. Now, if you've got any questions during Roger's presentation, please type them in the chat panel and we'll address them periodically throughout the session so as to not interfere with Roger's presentation. And remember, folks, that the chat is open to everyone and we do have some ground rules. Always be kind and supportive in your posts. Secondly, keep to the topic. Thirdly, no political discussions allowed whatsoever. And fourthly, please keep your side conversations to a bare minimum so that the rest of us can focus on the education and the information that Roger is going to be sharing with us, because he's here to give us an edge in the market, folks, and to help us all become much more confident and consistent in our trading activities. Now, if you were with us this morning at 8 o'clock Eastern Time for Roger's pre-market briefing, you'll note that there were several catalysts on tap that we needed to be aware of. So coming into the open, the chip sector, we saw that Micron and Intel were both up coming into the open. On the consumer front, Booking Holdings was up 1%. On the mags, Tesla was up 1%, Meta up 1%. On the crypto front, Bitcoin was starting to come up just a little bit more, and as a result, those Bitcoin-related stocks were also rising. And lastly, folks, just a reminder, it is going to be a short week. The markets are going to be closed on Thursday for Thanksgiving and in the afternoon on Friday. Now, as far as Roger's small cap watch list is concerned, there were 6 tickers that he gave us today: ENLV, JXG, CJET, ATON, GELS, and ZJK. So let's go over to my chart and let's go ahead and see how these small stocks have been performing. In the upper left-hand corner, we see ENLV. And right here, these are 15-minute bars, folks. So right here at 10 o'clock, we can see that this bar shot up and basically went to 180. Our entry was 181, and then it turned around and backed off. So I'm glad we did not get a fill here, because this would not have worked out well for us. Now, the next one over here is JXG. The pre-market high was 696, and we can see it's just been chopping sideways on negligible volume. I'm not expecting anything to happen here. The next one over here is CJET, CJET. And we can see here on this particular bar, which would have been 1115, we did move up through our entry at 321. It went as high as 324, a paltry 1%, before falling back against us and knocking us out for a stop loss. The profit target and the stop loss settings I set here are 15% on either side of our entry here. So we did get a hit here, but this did not work out for us the way I track things. In the bottom left-hand corner, we have ATON. The pre-market high was $4.75. It's been trading here below $3 ever since the open, and the volume is almost non-existent. So nothing happening here. On GELS, we can see the pre-market high was $1.36. The market opened up here like around $1.30, and it's just been hanging here, just been moving sideways, not doing much. Couple of wicks here, volume falling off here, not expecting much here. But the star of the show today was ZJK. Okay. Now, from that perspective, the pre-market high was $2.90. And right here on this particular bar that would have ended at 945, we can see the market opened up. It hit our entry point. We would have gotten a fill Our profit target at 15% was $3.33. So we easily hit that. And then we continue to move up higher here. Ultimately, once again, up about 40% at this point in time. So this is pretty nice. If Roger were trading this, he would have said, hey guys, let's go ahead and take some profit here at 333, move your stops to break even, and let's keep a runner going on higher. So this would have been very, very nice. So anyway, that's how our small caps did today. We had two hit, one didn't work out, and another one is up big for us. So let's go back to the presentation. And before I do leave the small caps, I do want to let everybody know that when Roger selects these, his focus is not only on price action, but primarily on extreme volume. He's looking at small caps that have extreme volume pre-market. I'm talking about volume. It's 100 times more than what its normal volume is. Also, remember, folks, that small caps are their own animal. Okay, they're not driven by institutions. No institutions are putting any money into small caps. As a result, it's just retail traders like us that drive the action. And also, if you're looking at these trades, only consider trading them during market hours, not during pre-market, but during market hours. And if you don't have a fill by around 2 p.m. Eastern time, from that standpoint, don't take that entry off. It's not worth the risk. And oh, by the way, never hold these overnight. It definitely is going to bite you more often than not. As far as Roger's large caps are concerned, we noted there were several shorts and longs. There were 8 shorts, and you can see them here. His concern here is be careful about the shorts because the market, in particularly NASDAQ, MAGs, etc., are running pretty hard to the upside. You just want to be careful about shorting these stocks. On the long side, there were 12 that he selected for us. I have TMO with an asterisk, and I have STE with an asterisk. Roger commented that both of these were nice looking A-line setups. So for those of you that may not have been with us, when Roger goes through his large caps, he basically brings up the chart for each one of those and gives us some tips as to what he's looking for to consider a trade. And from that perspective, these were all on his pre-market watch list. And if any of these tickers, basically met his setup criteria, more likely than not, okay, these would end up being trades that he issues in the trading pit or in other of his premium strategies. As far as his closing pre-market comments were concerned, boy, we noted that the futures were bullish coming into the open, okay, largely due to the fact that the NASDAQ was up so high. He also pointed to the fact that the put-call ratio was now starting to favor calls, and also that when we looked at the sector rotation, we noticed a few more speculative stocks that are interest rate sensitive moving up higher in that sector rotation. We noted that the bonds were trading up in their range and that the VIX was lower, but still above 20. So what Roger's really hoping today is that the bonds are going to punch through its range and move higher, and the VIX will continue to move lower. Those two things happening together are going to help us determine if we've got a really nice recovery here. Now, he also noted that the SPY, the RSP, the QQQ, the QQQ, the major indexes that we're looking at are somewhat pinched. They're stuck right between the 50 and the 100 moving day average, moving sideways in that area. And he's hoping that if the VIX moves lower and the bonds move higher, that those indexes are going to push up and they're going to move through this area of resistance. He does expect that the markets are going to open up today, but wouldn't be a bit surprised if they then just sort of drifted sideways. So they'll open up, they'll bounce up, and then just chop around sideways. From that perspective, once again, always be careful, folks. It's a Monday. And on Mondays, typically, Roger likes to stay away from the markets in the morning. He also pointed out to the fact that it is a holiday week. The markets will be closed on Thursday, and they will be closed on Friday afternoon. And also here, guys, no FOMO, no fear of missing out. Be patient, let the market resolve itself. And from Roger's standpoint, if anything's really going to happen, he's probably going to take a hard look at it this afternoon, just letting the morning clear itself out, let the markets basically if you will, show their hand. So, as far as today's agenda is concerned, folks, once again, Roger is going to be doing a deep dive into market internals and how to use them. If you've spent any time with Roger at all and with Matt, you know that they pay close attention to market internals. The focus will be on the VOLD, the ADD, the tick, and the VIX. He's also going to give us an introduction to the Master Blaster Oscillator. I love that name. And he's going to show us how to combine these three indicators for synergy. We're also going to be talking about using levels to help enter and exit trades. And as a bonus, Roger's going to give us an afternoon update on what his watch list is. Now, guys, if you've got any questions during Roger's presentation, please type them in the chat window, and we'll address them periodically throughout the session so as to not interfere with Roger's presentation. Also, remember, the chat is open to everyone, and we do have ground rules. Always be kind and supportive in your posting. Number 2, keep to the topic. Number 3, no political discussions allowed whatsoever. Also, folks, please keep your side conversations to a bare minimum so that the rest of us can focus on the education and information that Roger's going to be sharing. Because after all, he's taking time out of his busy day to give us an edge in the market and to help us all become much more confident and consistent in our trading activities. And with that, folks, let's say hi to Matt. Let's say hi to Roger. Gentlemen, how you doing? Is the day treating you well? Matt, how's it going for you so far?
Oh, we're hanging in there. It's been a interesting morning.
Yes, it has been. Any surprises from your perspective, Matt, or is it things playing out about what you expected?
You know, you never really know what to expect on a Monday. I like the strength we're seeing, but I don't like how some of the internals are. Like
Yeah.
ADD is only at 500.
Okay.
I don't love that.
Yep. And that's something I know that Roger and you are going to be talking a lot about is those market internals. The fact that not only do you look at the charts, the tickers themselves, but the market internals are just is bedrock for you.
Yeah, there's going to be a lot of market internals. I'm giving a little. I'm sending this out right now to people as a bonus here. In class, but here's a Picasso for you. Okay.
I love your Picassos. By the way, your camera's off, FYI.
Let me turn on my cam. Sorry about that. Let me put. I see something happening right now in real time, so I wanted to. Let me get that going.
Yeah, no problem. You focus on that,
There we
Roger.
go.
We got more people coming
No.
in
I just
here.
wanted
We're
to
good.
give. I just wanted to give people a freebie. I see a good short here on Oracle.
Yeah. You called it out this morning. Yep.
Yeah, and I went against us, and I mean, not again. It didn't go anywhere. We didn't have a position on, but I still am bearish Oracle, but it right now is breaking the VWAP, and I'm not really bullish on this stock. Okay.
All right.
Yeah. Just FYI, folks, if you want a little quickie, I think Oracle's got in the next day or two some more, maybe down right here, just a couple of points.
Oh,
No
yeah.
biggie right there.
Just a couple of points on Oracle. Hey, Roger, interesting after the open, you shared some information with me, but on the small caps, we actually had two of them hit, Roger.
Oh.
One was a loser. Unfortunately, it gave us an entry, went up exactly 1%, and then fell away and knocked us out.
Which
But the star,
one?
that was CJET, CJET.
CJET 325. Yeah, look, did it go to 325?
Yeah, it went to the pre-market high was 321, and it went to 324, and it turned right around. But the star of the
wait, hold on a second. My entry on CJET is 325.
The pre-market high was 321.
All right, but I'm just saying I do have three. I specifically gave this morning. My entry was 325 on the morning show.
Okay, so you're a little bit more generous. All right, that's fine. Well, if that's the case, if people were on at 325, it came within a tick of hitting.
Yeah.
And the same, by the way, with ENLV, it went to 180, not 181, and turned right around.
ENLV, and my ELV, and my entry was 185 on it, 185, and It did not go to 185.
That's interesting because,
Yeah.
all right, never mind.
You got to,
Pre-market.
I write down in the morning when I give them to you. I
I
write
know.
down.
I didn't know whether eyeballing was different than actual chart reading.
No, I literally give people the buy level and say it has to be, and I write that price down. So I can tell you my prices every morning if you want. I can
No,
write.
I got you. No, I got the prices. I always
Okay.
recalculate to what the actual pre-market high was. So you were a
Got it.
little bit more generous there, but doesn't matter.
Yeah.
The star was ZJK. Oh my God, Roger.
Oh my.
It's
Oh,
up 40% at this point.
yeah.
I mean, it's high. It went to $4.05.
Yep. Yep. I got to
And
say, Raleigh, those small caps are, yeah, yeah, we got to use exactly my levels, the ones that I give you, unless I have a question mark, and I would only give a question mark if it's still making a higher high, because then I don't know what the high is going to be.
so your pre-market high that you listed was $2.95.
Exactly.
We hit that in the first 15 minutes
Yep.
of the open, and it went to, the 15% initial profit threshold of $3.33. It hit that, blew through that, and went as high as $4.05.
Yeah. Yeah. William says your entries were perfect and saved us money. Well, thank you. I appreciate that. Yeah, I'm very specific about the entry prices, as you know, and that's why I say above this price. So yeah. And C-Chat, it was exactly, I have it right here, 325. Anyhow, it's all good. It's all good. And man, I cannot wait to launch this thing. It's going to be fantastic because I'll be monitoring these throughout the day. Now I'm just, giving them to you as freebies.
Right.
That's
So that was exciting. Now, outside of that, Roger, you basically said, "Hey guys, don't be surprised if the market opens up and then just sideways." Is that what you're seeing so far, Roger? Any surprises?
No surprises at all, actually, not at all. To be quite honest with you, my only surprise is that we managed to get this far up before cooling off. I mean, this is a holiday week. This is the biggest travel week of the year. Institutions are not playing, and we're literally between the 50 and the 100-day moving average. Folks, entries are going to come slow right now. Why? Because the SPY is not giving us any tailwind. So we really need to focus on stocks that can handle their own weight, and there's just not that many there. Here's what's interesting, and here's something interesting, but it also kind of confirms what I'm looking at here. Let me show you. I thought this was really interesting. Right here. So we have 123 stocks at making a 20-day high, right? Coming into today, we had 149. And earlier when I saw it, it was like 100 only. So we actually have more stocks we are higher right now. The market has been going straight up this morning, but there's actually less stocks up. Look, this is right now 123. Coming into today, 149. Can you see my screen?
Yeah, see your screen
Oh,
perfectly.
okay.
Yep.
Stock Fetcher.
Yes, exactly. I'm on Stock Fetcher. So this is really, really important, folks, because it's telling us that market breadth is not improving all that much better. Let's see. 128 stocks making 90-day highs. Coming into today, we had 115. Okay, that number's getting a little bit better. But again, the 1 month highs, there's not as many stocks right now. And that's not great. Also, VIX is being very stubborn around 20. Very stubborn around 20. Remember, anything above 20, first of all, anything above 20 is going to tell us that options are overvalued or pricey. So when you have overpriced options and you have overpriced options and you're stuck between the 50 and the 100-day moving average, that's not a high probability place to be.
Good point.
Yeah, this is not a time to fire off right now on all cylinders or any of that. And look, Matt, it's still coming down. Still coming off. You guys saw my Picasso right here. To the VWAP, right to the VWAP. But volume is a little bit lower than usual. Again, Right now, it's a big question mark. It's a big question mark because we're not above the 50-day moving average. We need to get above the 50-day moving average. If we can't get above the 50-day moving average, things are not going to go well. All right. Market internals. Let's talk a little bit about market internals. I do have top stocks to give you. You know what? Let me give you the stocks and then we'll do the market internals. I think that'll be better. All right. And as I give you these stocks, remember what I always tell you. Every stock tells a story. Okay? Every stock tells a story. Okay, let's look at our shorts first. Let's put that. All right. Spirit Airline. During the holidays too. I guess it doesn't have good spirit. Notice something. Ever since September, the stock has been making lower highs. Okay, right away. That ain't a good sign. Okay. The stock breaks down, tries to get up to the 200-day moving average. Can't do that. Can't get up to the 200-day moving average, and then breaks down again. That's a stock that's giving us a pretty weak story right now. Like Ralph just said, dead meat. Dead meat. I like that. Dead meat. Yeah, I mean, this is not a stock I'd be buying right now. I can assure you, institutions have not been accumulating this stock. Maybe Kathy Woods, but Brian says about to go out of business. Brian, those are my favorite words when you're talking about the short side. About to go out of business is like the nicest thing you can possibly say. Verge of bankruptcy. Hey, come on, guys, lay it on, lay it on. That's what I want to hear.
And you even slipped Kathy Woods in there as well, Roger. So,
And I slipped Kathy Woods in there too. I mean, that's great. Don't scare me with a good time, okay? Bankruptcy, dead meat, go out of business. That's exactly right. That means we're on the right track. Remember, this is a short. Yeah, I'll take all of that. Okay, let's continue. This is going to be a little controversial, okay? Netflix. Netflix is not doing well. Netflix is not doing well. And I'm going to tell you, I've been talking about this for years. I love the company because I enjoy watching their movies. I watch movies more than anybody. I trade and I watch TV. That's the only thing that could slow me down, that can get me out of like the market, is television. My wife and television, okay? Those are the only two things that can get me, and Clyde. But like I could just zone out and watch a good show and just forget about the market. Otherwise, I'm just stuck to the market. So let me tell you, I love the stock, but I can't stand their business model, and I've been saying that for years. So the last thing I want them to do is go out of business because I'm a big consumer of them, but their business model is not sustainable. They are actually ironically, the what was that? Blockbuster. Do you remember? Of course you do. You remember Blockbuster?
Yep.
They are making exactly the same problem that Blockbuster made. Okay, they're doing exactly the same thing, and they actually created the same problem. So be careful what you Anyway, it's an interesting world, but they created this exact same situation that they caused for Blockbuster, which is really ironic. Karma, Richie, it's true. Karma is just something. Okay. So that's that. Not a good looking stock at all. Very bad looking stock. Very bad looking stock. I mean, every movie that's on there is a foreign movie now. Some of them are great, but that's not where the money is. All right. This stock has earnings in 2 days. Very nice looking stock. If you want to day trade it, that's a good day trading stock right here. That's a nice stock. Doesn't have a lot of volume, but it's a nice stock. Not a bad stock. They created a business with a very narrow moat. Yeah, exactly how. This stock looks really nice for a short. CELH. Celsius Holdings. I guess people don't have the money to buy their soft drinks right now. But yeah, they're not doing great right now. T-Mobile. That's a beautiful A line right there. Very nice, really nice short right there. like a really nice swing short. Matt, take a look. Are you looking at it? Oh, he stepped out for a minute. Very nice, very attractive pattern right here. Very high probability pattern. I like it. Make a little note for myself. This one we talked about. Oops. This one we talked about earlier today. Oracle. Still holding on below the VWAP. The market hasn't really gone anywhere, but I still like this for a short. This one. Very nice short. I would give this a little more time to brew. And I would probably start selling it right here. Right there. Let's set an alert for ourselves, shall we? This is on a daily chart, so we'll make it 1 week. Okay. Right there. All right. Costco. By the way, Costco being in the below the American flag, lower highs, that's not a good look. That's not good for our economy.
And
Hey,
it's
Omar, good to
interesting
see you.
there, Roger.
Yeah.
We had such
Yeah.
good, retail reports from Ross and TJ Maxx and Walmart,
everybody
but yet
else.
Costco, yep.
Yes, the reports, those things are great, but they're not, it's just the reports are just one factor, as you know.
Just
especially
one factor. They're not all going to be in that basket, but it was interesting to me. Yep.
Yeah, it was. And by the way, overall on that topic, overall retail did really well. So yeah, I mean, look, we were. When I tell folks that earnings were twice as good as we were expecting, they look at me like, "What?" I'm like, "They were. They were twice as good as expected." I don't know what to tell you. Yeah, and Oracle. Oh yeah, I already gave you that one. Okay. So out of these two, out of this list, the ones that I really like right now, a lot for swings are T-Mobile and hold on. And this one, but this one has earnings. So I would be careful. All right, let's look at the long side. This is a biotech. I gave you guys for free because we still haven't launched the small cap service, but anything under 20, I'll be posting over there. It's a nice biotech, nice breakout in the biotech. Costco packed more than ever. That's interesting. My parents go there. I should ask them. I know that somebody here, and this is actually on point. A lot of folks are looking for computers to buy. Costco has some really good cyber powered computers. One of the members here sent me a link, like $200-300 better price than they were a few months ago. I'll post it for you guys in the Telegram channel. But you can get a gaming computer now for about $800.
That's amazing.
Which is perfect for trading with multiple monitors and doing all that. You don't need anything more than that. So before this would be a $5,000. Now it's $800.
Mm-hmm.
Okay. Beatrice, you took advantage of SNDX. Good. I'm glad to hear that. Here's another biotech, same industry. You guys know what kind of pattern this is by now. It's a very nice A-line. Really nice A-line pattern. General Motors. That's a very nice swing trade right there, by the way. It's a very nice swing. CAH. Very nice healthcare. Very nice healthcare, actually. Really nice healthcare. And not really a biotech, more of a healthcare, but that's a very nice look right there. Oh no, Phil. These are top of the line. These are top of the line. No way. Those are the worst. Yeah, don't buy. Listen to what Phil says. Don't buy Celeron or Chromebooks. These are like
they're decent, but they're not for trading.
No. Right,
Yeah.
right. They're good for like if you're writing a book report or something,
Yep.
But if you're, they're great for that. But if you're, my daughter has that for school, and that's fine. But if you're trading, these are gaming computers that like 3 years ago were $4,000 or $5,000. I'm not kidding. All right, so CH looks good. Barrick Gold looks great. Looks really good, actually. It looks pretty good here. Look, even better right here at the VWAP right here. Bob, if you want, send me an email and I'll send you a couple of links. Or I'll just post them later here. If you guys remind me, I'll post them here. But there's a couple of really good bargains out there right now. IBM is starting to look good. I would give IBM, I like what I'm seeing, but I would wait for IBM to get above this level right here, just to be on the safe side. GRAL looks beautiful. That was a stock I had on my list. Stefan, I think I had that on my list last week. Very nice looking stock. And then IONS, also healthcare stock. Healthcare is going nuts today. Yeah, I'll post it on Telegram or send me an email. But the sweet spot is $800 right now, which I like amazing, amazing. Just simply amazing. I paid $800 for my computer 4 years ago, and I'm literally about to replace it right now. I'll send you a link too, Richie. I'll send you guys a link. Okay. All right. Those are the stocks that I'm looking at right now, to the long side and the short side. Now, I want you guys to take everything I'm saying with a caveat right now, and I'll tell you why. Volume is slowing down right now. We've only increased in the last hour about 8%, 7%. We're slowing down. We were at 40% at about 11 o'clock. Now we're at 48. We're starting to slow down. And this is going to continue into Tuesday and Wednesday. Yeah, I'll send a link to everybody. Just send me a quick email, and I'll send you guys a link, okay?
Is this something you can put in Telegram, Roger?
That's what I keep saying. I keep saying I will post it in the Telegram. How about this?
There you go.
Give me till the end of today. If you don't see it in the free Telegram channel, then send me an email. How about that?
That sounds good.
Thank you. Now I'm going to go ahead and close the chat, okay? I'm going to close the chat. Thank you, Raleigh. All right. So volume is going to get lower. We're right now still doing okay. You know, to be honest with you, I was surprised. I was a little surprised. I even told Matt that volume is actually pretty good about an hour ago. It's kind of on par, but I could see it's just now starting to slow down, and people are going to be taking it slow. A lot of people are not going to be here on Wednesday. I know that for a fact. Although this morning we had 800 people on, so I don't know. We get a pretty good crowd, Raleigh. We're very consistent.
Oh yeah,
we're very consistent. But the point is, I understand people are on holiday or doing whatever it is that they are doing. Now, folks, before I get into market internals, I want you. Now, what we just did was we kind of went into the intermediate picture, the stocks, right? I want you to remember something: holiday season, low volume. Pinched between the 50 and the 100-day moving average, no clear directional bias, a lot of volume here, and VIX still at 21. None of those things are telling us right now that we're not in the rainbow, fairies, and crickets land, okay? We're in the, oh shit, something may happen right now. And I'm not trying to be facetious. We could just as easily right now go here or here, and I'll tell you why. The bond market. Now, I'm loving this right now. This is music to my ears. And anybody who's been watching me in the morning knows exactly what I'm talking about. The head and shoulder pattern here. Head, shoulders, right? The head and the shoulders. And I said the worst thing that could happen is us breaking through this level, the neckline, because this means higher rates. We've been going straight up. We're almost above the 50-day moving average. If we can break above the 50-day moving average, it would go a long ways to bringing volatility in the SPY below 20. Okay? It would go a long way. So we are on the right track. This is my levels from this morning, and it looks like we may be breaking them, by the way. I didn't even notice till now. So just keep an eye on my levels. By the way, how good are my morning levels, Raleigh? Look at this.
I know. It's incredible.
On the bonds. Pretty good, huh?
Yep. Bounce right off. And that upper level, once again, you've tested it 3 times. It looks like it's ready to get a move.
It does look like it's ready to move, which would be really great for this market, for the stock market. And you'll notice, and it's probably a good time to talk. But my point here is, folks, no matter how good something looks to you, you need to trade very small position size. You should be thinking risk right now. You know, I have 25 losers in the pit. I think two or three of them came from the period between Christmas and New Year's 2 years ago. I'm not kidding. I still remember the trades. That NVO, one of them was NVO. I remember it. I was being dumb. Okay, I was being dumb. My win rate was really high. We just started the service 2 months ago. Our win rate was like 97% at the point, and I was just being stupid. And I'm telling you, don't fall for the banana in the tailpipe. Don't do it. Don't do it. Just don't. Even if it looks great, just put a couple of shares into it. Just put one contract. This is not a time to get frisky. Either seasonally, either internally, momentum levels, VIX levels, SPY levels. Everything is telling us don't get too frisky right now. Don't get too frisky because, and here's the other part. Here's the other part of the equation. We haven't even overcome this yet. We would need to before the market. Let's just in theory say the market's going to heat up. You've got one level, two levels, three levels to overcome before the market becomes bullish again. So we have plenty of time. We've got plenty of time. All right. Now let's talk about market internals. Now I look at I have a full screen. Believe it or not, but I'm going to have to upgrade my screens. I'm going to need to get more screens for the small caps. Yes, I'm going to need to get more screens.
More
I know
monitors.
it sounds well, yeah, more monitors. I'm going to have to get more screen. But with that said, let me explain to you how I use this. And I know I've explained this several times to folks, but I want to explain it to you. Now, a lot of folks have a misconception that we only use market internals for trading the SPY and trading the SPY via Trading Zone Live or Alpha Zone Pro, which I'll talk about in a minute too. That couldn't be further from the truth. Okay, let me explain. If you want to go long a stock, right, the biggest edge you can have ever in the market is giving yourself an advantage at a profit. Here's what I'm trying to say. If you buy a stock and that stock goes into profit, 1 penny, 2 penny, 3 penny, you have an advantage already. You're at an advantage. You know why? Because the odds are in your favor the most when you're making money on a stock. When you just start making money on the stocks, that's when, mathematically speaking, that's when the odds shift in your favor the most. Okay? All right. This is not a theory. This is a mathematical fact. Okay? When you're playing cards, when you're trading, when you have this, when you're this right here, the odds shift in your favor. Okay? Because if you can go back in time, you would always make a bet on a trade that would put you in profit. See what I'm saying? Okay.
Yep.
So this is not a theory or anything like that. I'm very careful to separate my theories, objective theories, and mathematical facts. I don't want to rope you into something that you think is a fact when it's my theory, and I want you to know when something is a mathematical fact because it should mean something to you, of something very important to you. Okay, now let's move on. So Omar, for example, he uses the Pro Trader dashboard all day long, just like I do. He's got it right here like I do. Okay, that's how he makes his trades. That's how Omar has made that $5 million using the Pro Trader dashboard, okay, and market internals. He's using market internals to determine, to time his entries with the market internals. All right. So whether you're day trading, whether you're swing trading, whether you're position trading, if you can find something to give you an instant edge with your entry, you are automatically trading at an advantage, regardless of your time frame. You have an edge right away, right there. Okay. So how do I interpret this? I interpret this for many, many different reasons, and I'll show you why. And I use it all day long, whether I'm day trading, swing trading, position trading, or scalping for 3 seconds. I'm using this. So let me show you how and what. You've got the VIX here, all right? The VIX is very, very important because the VIX is telling us in real time. These are all 5-minute charts. It's telling us in real time if market is increasingly getting fearful or declining in fear. Okay. Now, bonds are breaking out, right? or at least if they're not breaking out, they're sitting at the highs of the day, which is about as good as you can get. And it's no flight to quality. The market's not breaking down. So you don't have any flight to quality. Nobody's putting their money into the bond market because they're fearful of the market right now when VIX is at the lows. See what I just ascertained just by looking at these two things?
Yep.
Just by looking at these two things. Bonds are up. Stocks are positive right here. Stocks are positive right here. And so you have bonds sitting at the high of the day, and you have volatility sitting at the low of the day. Let's think about that one for a second. Gee, how much more bullish can we get than that? Well, let's take a look at other things. How is the Volt doing? Oh, the Volt is going straight up. It's not diverging from the SPY, but it doesn't have to diverge from the SPY. You could take a trade when it's diverging from the SPY, but there's no law that says the Volt and the SPY can't move together higher, which they are right now, which is confirming that we are, in fact, moving higher. Okay? All right. Price of the SPY is above its 5-day value area. The most liked price in the last 5 days, and this is not according to me. This is math right here. This is the most traded price in the last 5 days. 661.74. Okay? This encompasses 70% of such price right here. We are above that area right now. We are above the high, and I don't see any rush to come off. Okay. Tick isn't doing anything. It's not coming up or down. It's pretty flat, which is pretty consistent with less activity in the market today. So, and ADD, if ADD goes just a little bit higher, we're going to fill our morning gap right here, which would put us at positive 750, which is definitely not negative or weak. And we were all the way at negative 421 at the morning when we had the pop. So we actually had a lot. Remember I said there's less stocks making 20-day highs? Right here. So just by looking at this, I was able to ascertain that we have a very high probability of going higher right now based on these three factors, that we have no divergence between the market, that if somebody goes on the gas pedal, we are prepped and ready to go higher, and we're very comfortable about being above the last 5 days value area. That's pretty important, wouldn't you say, Raleigh?
Yeah, absolutely.
I think that's very, very very, very important. So don't just think I use this to
trade the SPY. Yeah.
Alpha Zone Pro.
Yeah.
I do use it to trade Alpha Zone Pro, and I'll show you how in a second. But I wanted you to understand that I use this. So let me give you a good example, okay? Let me give you a really good example. Let's just say, for example, I want to go long the market, okay? And let's say Volt is going straight down and ADD is negative 421. Am I going to go buy the market? Why? There's nobody buying the market right now. See what I'm saying? Now, let's say the SPY's going down, but let's say the Volt is going straight up and ADD is starting to come back up, and VIX starts coming down and staying down, not just coming down, staying down. See how it's staying down here? It's not popping anymore like this. It's not doing this anymore. It's now staying down for 4 bars.
Right.
Staying down. Oh, and bond market still broke the high and is still staying here.
Staying there, yep.
And what time is it? Oh, it's 12:30 during a holiday week, and the market is making a new high on the day. So folks, let me put it to you like this. I have the chat closed right now. I don't have the chat open, but ask any trader that I've ever traded with me, like Richie or Omar, and they will tell you they are looking at market internals all day long.
All day long. Why not?
All day long. All day long.
Well, Roger, it's, anybody that trades, okay, I'll put myself in this category. We always are looking for confirmation that we can be confident in, okay? And what you're sharing with the market internals here is a very, very objective way to see what's happening in the overall market as a confirmation. I
Right.
mean, and by the way, there's just one comment here I'd like you to address. Bill
Yes.
basically said, and I know where he's coming from. Bill said, but Roger, this morning your Picasso said the SPY was moving lower, and I can tell you for a fact, you never said that, And so I think
No,
what,
no, no, no. I did. Here's what I said. No, 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 no. Here's what I said. I
yeah,
did. I did. No, no, no. Let me show you what I said. I did. I did. I did. I said this. Here's what I said. No, I did actually. He's right. Let me show you. Here's what I said right here to the VWAP. Yeah. We didn't go all the way to the VWAP. We went about halfway to the VWAP. We went right here. We were going up and we went to here instead of going down here. I did think we were going to go lower. I thought we were going to go lower, and I still think we're going to hit the VWAP today. I do. I do. I think we're
but
going
the
to hit
thing
the
is
V.
that Bill
Yeah.
needs to understand is that was a snapshot in time, Roger.
Yeah, of
And what you're
course.
looking at is the real time right now. And I know you well enough to say, hey guys, it could be doing this, and if it does, but it could bounce the other way.
But
We're in real time now.
but also something else. Bill, and I don't have the chat, so I can't really see what you're saying, but I want to show you something. What time frame is this based on? What time frame is this based on?
Is that the daily?
No, it's
No,
one
that's
day, 5 minute,
yeah, 5 minute. Yep.
5 minute. And where is this level that I'm pointing to? It's at 665.50. 665.50. We're not we're I didn't say here. I said six here. Just this means we're coming down for a little bounce. From here to here. We came down to about here. That's all. But this isn't market coming down. This is a very small move to the VWAP.
Mm-hmm.
That's all I'm saying. So you got to take what I'm saying into account. This is not a daily chart. This is a 5 minute chart.
Mm-hmm.
So we're talking two. This is literally two points right here.
Mm-hmm.
And I still think we'll come down to the VWAP. All right. But things are looking pretty good right now. Now, I didn't say we're going to come down and break the low. I said we're going to come down to the VWAP. So, but I like how the market's looking. I really do like how the market's looking. It's looking good. And by the way, the VIX just broke the low right here. And I like when all this. See, here's something you guys need to pay attention to. When this happens at 9:30 in the morning, it means almost nothing. When it happens at 12:30, it means a lot.
A lot. Yes.
See, it's much harder to manipulate the market into doing something stupid at 12:30 in the afternoon on a holiday week than it is at 9:30 in the morning when there's all this FOMO running around. You understand?
Mm-hmm.
So this is a lot more meaningful. This is very meaningful compared to something happening at like 9:35 in the morning, or that's why I don't do it. That's why I don't really pay attention to anything before 10 o'clock,
Before 10.
except ADD. This is honestly the only thing I pay attention to before 10 o'clock is this. And I'm going to talk a little bit about that for a second. This is
Roger, just real quickly here, I want to
yes.
share a wonderful comment from Richard. He said,
Yes.
I can be looking at a stock and I'm convinced I love it, but I will not hit the send button until I look at the market internals to confirm my decision.
Exactly. Which is exactly what I just said a few minutes ago. The
Yep.
best edge you can get is when you can get a leg up on a trade, which is
Yep.
exactly what Richard just said in different words. It's exactly right. Yeah, yeah. We said exactly the same thing.
Yep.
What's the point? I said, what's the point of buying it now? Wait till market starts coming back up. Yeah. So this is really valuable no matter what time you because folks, being on the green side, the more you're on the green side, the more you will make green. It's the mathematics catch up. So yeah, Richie and I will not make if we see a divergence in the Vold and the SPY's going up and the Vold is going down, he's not going to go buy a stock. He's going to wait for a pullback. And I'm still not convinced that the market's not going to pull back to the VWAP today. By the way, again, all I'm saying is we're going to pull back to the VWAP. It's just a little pullback before we go. That's when I would start looking for longs. That's kind of what I was saying. I'm going to start looking for longs here until we get there. I'm not going to chase this move.
Mm-hmm.
But the move is looking really good. Thank you for that comment, Richie. I appreciate it. Okay. All right. Now, so boy, where does time go, right?
Yeah,
All
I know.
Where does time go? All right, so let's start talking about these internals a little bit more. And anything, folks, I'm going to be talking about this topic all week. So anything I don't finish today, I will talk about tomorrow, and anything I don't finish tomorrow, we'll talk about on Wednesday and on Friday as well. I will be here on Friday as well. The only day I'm not going to be here is Thursday. I'll be working all week. So why is this ADD so important? I'll tell you why it's important. You're trading the market. And one of the things as you get more experienced, you're not just going to look, trust me on this. This will happen to you. It may take some time, it may already be happening, but you're going to start taking into account not just the move, but the quality of the move. How you got here, not that you got there, but how you got there. You're going to start doing visual backtesting. It's a matter of time, but I promise all of you will start doing it. And one of the things you're going to start noticing is volatility increasing or decreasing or staying the same in the stock. Because if volatility increases, your risk is higher. Everything else stays the same. Volatility is higher, your risk is higher. Volatility is lower, your risk is lower. Why? Because the ball dribbles less. It's just small movement instead of big movement. What this is telling you is the ball being dropped from the Empire State Building or from a 3-foot tall little kid like this. That's what this is telling you. The market is the ball. The market is the ball, okay? So this is going to tell us if we're expecting a big move or not. So this is telling, let me explain to you what this tells us. This tells us if a stock is trading above or below yesterday's close, whether it's up or down on the day. And when this gets up to about 900 or 1,000, that means you have enough stocks for the day that are higher to say, hey, institutions are definitely pushing this thing higher, okay? When it's below or 900, negative 900 or positive 900. I like to use 1,200, but let's just say 900 is a good starting mark to look at. So what this will tell me is, am I dealing when the market opens? I want to know, should I be moving my stops a little wider? Should I be reducing my positions? Are we dealing with a whopper of a day today, or are we dealing with a quiet day? That's what this is telling me. Without anything else, that's what this is telling me. So you guys want to know, hey, is today going to be a real big day, or is this just an open that's scaring us? That's where you look right there. And trust me, it's at 9 when I come into the office, and I'm sometimes a few minutes late, and I give you an idea of what I think the market's going to do. The first thing I'll do is I'll say, okay, let me look at it. Are we going to have is it going to be one of those days, or is it going to be just a nothing day? And again, it will change throughout the day, but that'll give you a really good snapshot of what you should expect in terms of volatility in the market. Because if every stock is trading where it closed yesterday, nothing is going to happen in the market. In order for a stock to get on my watch list, this list, and these are my Pro Trader dashboard list, the stock has to be trading above or below yesterday's high. So right away, I'm telling you, if a stock is not trading above, or if it's trading in range, the odds are it'll continue to stay in range. The only way a stock can go higher usually is when it opens higher or opens lower. Rarely they do that throughout the day. That's not common. So again, this will tell us how much is the market angry today? Is the market awake today? Has the market had coffee today? That's what this is telling us, okay? Now this is telling us how long the leash is, you understand? So let's say you have an angry dog, right? But let's say that dog is on a 5-inch leash. What is it going to do? And then that's it, right? But let's say that dog is on a 30-foot leash. Uh-oh. Uh-oh. That's what this is. This is the head. This is the body. This is the car. This is the steering wheel. This is the gas pedal. Okay? Understand? They work together. The head can't go very far without the body. Think about all the examples I just gave you. They're all really good. I spent a lot of time thinking about them. Car, the steering wheel, the driver, the head of the dog, the body of the dog, they work together. They work together. See, this could be really, really moving, but if this isn't following along, that means nobody's really pressing on that gas pedal and it'll just stay here. Which now, if it's at 900 or 1,000, and that's okay, that's fine. But if it's not, but this is moving higher, if this goes on the gas pedal right now, like it's showing, this could really move higher. We can see a better market breadth. So these two are very, very important. Okay. And then obviously we're always looking at the VIX and the relationship to TLT. Is TLT moving higher? That's bullish for the market, but not when markets are selling off like rabid dogs. So this is very valuable when this is at 20 or lower. When this is above 20, this is useless because your money's going to be coming into the bond market out of fear. But when fear is lower, you can really start using this. And most of the time, VIX is below 20. Most of the time, VIX will go above 25 times a year, 6 times a year. Okay. So again, my point here is we use all these together. And here's Alpha Zone Pro, which is what we're going to be talking about in a few minutes. Now, how do we use Alpha Zone Pro? I'm going to show you how we use Alpha Zone Pro. This right here, and I don't care if you use this or this. They're identical. These two are identical. And what this is, it's an oscillator. The only difference between this oscillator and every other oscillator, well, there's actually two major differences. The first difference is I took out divergence. There's no divergence here. Divergence is what slows down these oscillators and makes them lag. So I took out divergence. Number two, I made it so that it takes into account 3 different time frames. Okay. The 5-minute, the 45-minute, the 5-minute, the 15-minute, and 45 minutes. Okay. Oh, wait a minute. No, not this one. That's the one in the other one. This one just does 5 minutes. Sorry. This one does 5 minutes. But let me explain to you what it does. It's using a smaller time frame and it's looking for candles that are closing and not the high and the lows, but the actual closing price of the candle to get higher and higher and higher or lower, lower, lower. You'll see in a few minutes. I'll show you a demonstration slide. You'll have to wait about 10, 15 minutes. So here's what I look for. These are our levels. See level 1, max move, probable move, likely move. And here you have levels. Price will trade at any given time in between these levels. And these levels act like magnets. Okay. Now, the way you're supposed to use this is this. See how it gives you an arrow? And if you highlight by the arrow, it gives you a cloud. That's a cloud right there. That cloud is telling you your stop loss and your profit target. That's your stop loss. That's your profit target right there. Okay. So it's very dynamic. Here it is too, and it's based on volatility. Stop loss, profit target. Okay. Now, in order for this arrow to generate, listen to this. In order for this arrow to generate, 3 things have to happen. Okay. First thing, now listen to me. All right. The arrow doesn't just appear. The asset, see these bars here? See these bars? The bars have to make a 20 bar high. That's a 20 bar high. If they don't make a 20 bar high, there's no arrow. Then the bar has to at least 50% of the bar has to be at the bottom, like it is here. The wick has to be there. You have to have a wick. You have to have that wick right here. So you need to have a bar that makes a 20 bar high and closes near the bottom 50th percentile of its range, like here, here, here. Then you need to have this happen near one of these 3 levels. One of these 3 levels, okay? Or one of these 3 levels right here if you're talking to the bottom. And if you're taking trades from the bottom side, the arrow will be green, okay? Now, assuming, now listen to how, so you got to have a 20 bar high or a 20 bar low. You got to have a reversal candle. Okay. Two things right away, just with the candle. That has to occur somewhere near one of these lines. If it happens here, it's useless. It's very easy to make a 20 bar high in a reversal bar. And a lot of traders will tell you that's a high probability signal. It's not. It's just bullshit. It just looks pretty. But when you see this near one of these levels, that's when it's important, okay? These levels are derived from implied volatility from 0 DTE options and VWAP standard deviations. They're all based on actual price. They're not based on some mathematic formulas. Okay. So they actually have some sway, but not when you get a signal here, when you get a signal over here near these levels. Like that's a good signal right there. The closer you can get to one of these levels, the better. Now, so I just gave you, now we're not done yet. Think about all of these things that have to come together. You have to have a 20 bar high. You have to have a reversal bar, or here, same thing, 20 bar low and a reversal bar to the high side. It has to happen near one of these levels, either to the downside or to the upside. So that's already three things. Then you got to have confirmation from your oscillator. In other words, if you're taking a short trade, you should be closer to the top and getting the tring, tring, tring coming down. Like right here, there's a short, and within 10, 15 minutes, we start coming down. And we hit our profit target right there. Nice point right there. It's a nice point right there. Same thing to the upside. So just following this without anything else, you have to have a 20 bar high or a low. It has to be a specific kind of bar. Then it has to be near a specific kind of line. And then you need to have a confirmation from the oscillator. You need to have four things to happen in order for a trade for you to take a trade. Four, not one, not two, not three, not four. Plus, we want to see a divergence. Either if you're going to take a trade, you want to take a trade in the direction of the VOLD, which is this green line here, not the purple line, the green line, or you want to take a trade in the direction of the VOLD, and you get extra bonus points when the SPY is coming down and the VOLD is coming up. Basically, you want to take a trade in the direction of the VOLD against the SPY, assuming you get a green candle. So I'm going to repeat this again, and I'm going to do a class right now in a few minutes that will reinforce everything that I've been just talking about right now. But think about all of these things that have to happen. In order just to get the arrow, you have to have a 20 bar high or a 20 bar low. Then you have to have the bar turn a specific way. It has to be a hammer. All right? It has to be a hammer. Then it has to occur as close as possible to one of these levels. Reversal levels to the downside, up levels to the upside. Then you need to get a confirmation from the oscillator to confirm the move once you're in the trade. And ideally, we want to have all of this moving in the same direction as the trade. Okay? That is how you trade using all of these goodies. Now, is there any questions, Raleigh?
Roger, first of all, a lot of people just really appreciate this education. And, it's interesting. So some people are wondering, how can they watch this again? So I'm going to post this for everybody very quickly, that they can just go to your YouTube channel and they can watch this again, folks. Once again, this is terrific presentation. The one question that came up from several people when they were looking at the the Alpha Zone Pro, they noted, for example, that for today there were a series of blue bars that also had red down arrows. But I think you addressed the question, because a red down arrow is not an indication to immediately jump on the trade short. There are other factors that you need to look for. I consider that a heads up.
I keep telling folks that an arrow means nothing. It's very easy to, okay, If you go back 20 years ago, and bought books, they would have told you turtle soup, 20 bar highs and lows. Yeah, they may give you a little bit of an edge. Not enough for me, which is why I say just getting an arrow alone means nothing. It's got to happen near one of these levels. The levels are 10 times more important than these arrows.
Right.
This is where the money is. This is where the money is. This is just like a pretty little arrow to tell you that it's made a 20 bar high. Okay, think about it logically.
Yes.
Where do you think an edge is? Just because a stock or an asset made a 20 bar high and it's turning around with a hammer candle? That's not an edge. Come on. If that's what gurus will tell you. Fake guru will tell you is an edge. I'm not going to be dumb enough to tell you there's an edge there. If you guys think after everything I taught you that I would teach you that there's it made a 20 bar high, there's an edge there. Come on. There's no edge there.
Right.
That's not an edge. But these levels, this takes the zero DT options, market makers levels. It takes the market makers implied volatility levels from this morning's options. That's what the market makers think the measured move is going to be.
Absolutely.
Now that gives you something to work with. So I want you to sell at that measured move. This is basically the market makers telling us this is what we think the range is going to be today. They don't like losing money. And the other levels are based on standard deviations from the VWAP, which is really accurate. And VWAP is based on what? Price and volume. So these things are way more important. This is like Mickey Mouse tools these are just pretty little arrows compared to this. This is where the money is. This is where the money is. And by the way, in my defense, I've spent 12 hours teaching a class on this, and I've mentioned that at least 100 times. This is not the first time. This is not our first rodeo, me telling you this.
Right.
Just FYI.
So, no, but it's a good question. And I know as we shift into the next portion of this presentation, we'll be covering this in much more detail because you're going to be focusing on the Alpha Zone Pro.
Yeah, so if you guys want more of what I just taught you, I'm going to spend the next half an hour teaching it to you. And I'm going to explain the same thing in different words with much more granular details and examples. And I hope you guys pay attention to me, all right, and to what I'm saying. But I'm telling you, I'll get emails and people saying, "Ooh, Roger, I got 3 arrows and I took 3 shorts and I didn't get anything out of it." And I'll look at the time and the timestamp. I'm like, "Well, what makes you think a 20 bar high or low is going to give you the answer to your life problems?" Right. If it was that easy, don't you think everybody would be, "Oh, we're just going to use 20 bar highs and lows and hammer candles"? Come on. Do you really think it's that easy? No, that's why we got this. But I will tell you this. When you get a hammer candle around here, that sets you up for a nice reversal once you're in that zone.
Yes.
So, and then you get a confirmation from here. And at the same time, you got a confirmation from this. You're going in the direction of the volt. So yeah, I could see that. Okay, what are we doing? We're combining the market maker's move with a 20 bar high, a reversal bar, an oscillator, and market internals. That sounds pretty, now we're getting somewhere. Now we're getting somewhere. Now we're starting to get somewhere. Little 20 bar highs and lows, folks. That's for suckers, okay? I mean, so just because it's an arrow doesn't mean anything. All right.
Right.
All right. Any other questions?
I know, and there's a lot more questions about the Alpha Zone Pro. That's why I'm not putting them here, Roger, because we'll address those in the next section.
And we can also, and if I don't answer those questions live right now, then we'll just come back to them after I think you're pretty much what you just said, Raleigh.
Yep.
Matt, can you hook me up?
Mm-hmm.
Thank you, sir.